Hey everyone, want to give you the heads up that the Chart Guys has a new service coming out. The Chart Guys have always had goal number one of teaching people technical analysis, but we realized through feedback that takes a whole bunch of time and some people just don't have that time with their lifestyle. So we're going to be releasing a swing report that goes out on a weekly basis, and it'll be both in written and video format. And we are currently rolling that out with our members at the moment. So keep an eye out for our social media, and certainly in front of these videos I'll let you know when that swing report goes live. Essentially, the goal of the swing report is to save you time, put in a couple dozen hours every week, get this report out, and ideally help you profit. So I appreciate your support, and I will let you know when it is live for the public. Hey everyone, checking in on some of our laggard sectors. Let's look at the airliners, cruise liners, and private prisons. They all are very similar setups on the daily time frame, although today distinguished some of them from each other. We know that they correlate more to the financial sector more than any other major sector. So looking at XLF here, we've got our high, low of the pullback, which was a bit of a base of support established. Is this our lower high of the bounce being set? If this inside bar breaks bearish tomorrow under 24.13, the answer will be yes, and we'll be looking right back down to our low of the pullback, line in the sand support 22.96 to see if the bears can confirm a daily downtrend. And of course, if XLF confirms a daily downtrend, then it's going to put more downward pressure on all of these sectors, in my opinion. So XLF held the low of yesterday. A lot of names are about to look at broke their lows of yesterday because they've had some timely individual news, almost all at the same time. BA had bearish news yesterday after hours. NCLH, cruise liner, had bearish news that they're not going to start cruises until whatever date. That led to all the cruises seeing bearish action, some bearish action in the airliners because of the BA news. And then this morning, we've got private prison news on CXW that they are suspending their dividend. That's huge news. Look at that drop. Why is that huge news? Because they're an REIT. The reason people hold it is for the dividend. If you're suspending the dividend, you are removing the incentive that a ton of people have to holding it, and it also tells you the company might be strapped for cash, because with an REIT, they have to designate the vast majority of their cash to dividend distributions to be designated as an REIT, and by doing so, they then have to rely on banks for significant loans, because some companies will just hoard cash and then use that cash for expansion or whatever else they need in their day-to-day operations, and REITs can't do that because they can't hoard cash. So that tells us that CXW is a bit strapped for cash, and that obviously is not a good sign. And if you saw my video, which is on our YouTube channel, about shorting private prisons for my personal opinion and personal beliefs, I am liking this action, and I'm liking the fact that the monthly, weekly, and daily time frames are all in downtrends. Knowing that the private prisons are in downtrends on every single time frame, I say to myself, okay, S&P 500 is pretty darn close to its COVID bounce high, and this is where this sector is sitting. What happens to this sector if the S&P 500 pulls back more significantly? What happens to this sector if it starts to become a bit more clear that maybe Biden starts gaining against Trump in the polls? These are overhead headline risks on this sector, and there are certainly more risks in headlines, in my opinion, than rewards, at least from a bull perspective, in headlines for the sector. So we'll get to that, but let's start with Jets. So Jets, I'm viewing this as our high, low, and that's our lower high in my opinion. There is a little bit of a stutter step in here. We topped out, we set a quick little higher low, we saw a continuation. So if you want more details, you can use the 4-hour time frame. And the 4-hour time frame is still in an uptrend here with a low, high, double bottom, higher high, and this move is just looking for a higher low on the 4-hour chart. But for simplicity's sake, I am just viewing it as a high, low, lower high, and now the question is, can the bears get follow through and head back to our line in the sand support level of 1635? If 1635 breaks, we confirm the daily downtrend, and on the weekly time frame, we would then be looking back at 1127 support if that were to happen. Bigger picture, don't forget monthly time frames. On this entire bounce, we are absolutely just looking for a monthly lower high to form, and losing the weekly uptrend is what we look for to be convinced that our monthly lower high has been set. but losing the daily uptrend is what an aggressive bear would use for a monthly lower high to be set. So a lot has to play out. Another pattern that I'm watching, look at this volume. So for the most part, we've seen volume declining every single day, aside from one little blip in here, but we can at least see the last 6 days, the volume is declining every day. When I see that pattern, I make note of it, and I observe, okay, that pattern's going to break. We can't just fade to zero volume. So when that pattern breaks, which is very likely tomorrow, what direction does that pattern break in? Do we see a big red day for volume or a big green day? And keep in mind the color of the volume bar. You can't just look at that. You have to look at the candlestick shape, because you can have a red volume bar but a big long lower wick, which shows us a lot of bull volume. So you have to look at the volume and what the candlestick shape is, and you can even zoom in and look at the hourly volume to see where it was mostly headed. So what the bears want to see tomorrow is more than 4 million shares traded and a bear break of 1785, and they want to see the S&P 500 set its daily lower high and break the low of today, which is an inside bar, and that would have us setting up to be watching key 1635 support. BA is in the same scenario. Volume fading the last 5 days, high, low, lower high, and we're scouting a higher low compared to 166. Why are we looking for a higher low? Because equilibriums are the most likely scenario after significant periods of volatility, as reason number one. Reason number two, we're still 13% above that support. So if we are going to see, again, I view it as what's the most likely scenario? Tightening daily range. What would be required to see the less likely scenario play out and a confirmed daily downtrend? You need increasing bear volume for a couple days in order to see, these are my volume bars, in order to see the less likely scenario potentially play out. Cruises. So bearish reaction, gap down open on CCL to MCLH earnings. And again, we do have this little higher low and higher high mixed in here, which we can use the 4-hour time frame for clarity if we want. But for me, and for simplicity, I am viewing it as a high, low, lower high, scouting for a higher low compared to 1675 unless impressive bear volume and a market dump shows up. And that tells us if we do get that, we're going to have a tightening daily range into next week. RCL is the exact same thing. Key RCL support, line in the sand, is 5407. Volume pretty stagnant, just sideways over the last 8 days or so, 7 days. Watch to see how that volume pattern breaks when it spikes. Is it a bull spike or a bear spike? Private prisons. So I've been shorting Geo. And again, watch that private prisons video on our YouTube channel if you haven't seen it yet and you're interested in it. But CXW is the leader of the space. Look at the monthly time frame on CXW. It has been in a 2-year downtrend. We rejected from weekly exponential resistance yet again, and now we're looking at potentially confirming a monthly bear flag. We would have to break 833. We are still 20% above that support level. But 833 is the key level. Weekly support is 962. That is still holding. Daily time frame. So high, low, there's that same little stutter step, very similar pattern to what we're seeing on the airliners and cruise liners, but obviously the news leading to a huge gap down open, confirming the daily downtrend in a big way. We know next time we bounce, we're just looking for a daily lower high compared to 1327. And even if we do see a significant bounce and recovery from these bulls, we're just looking for a weekly lower high compared to 1444. What do we have here? A weekly trend change and a lack of follow through, which means zoom out and look for a potential bear flag. I have been shorting Geo, not CXW. And Geo confirmed its daily downtrend by breaking $12, but we didn't get much follow through. So bears definitely want more follow through under 1188. It's holding up better than CXW because it did not announce that it was cutting its dividend, or suspending, I should say. But people are assuming, hey, if the sector leader is having some trouble, we can assume that GEO might be having some trouble as well. Head and shoulders on the daily time frame. 1168 is a support level here. So we broke the right neckline, haven't broken the left neckline. The difference between CXW and GEO, and the reason that I chose to short GEO, was because the weekly time frame did not break resistance. It's a weekly equilibrium. Low, high, double bottom, lower high. And CXW was a higher high on the weekly. So I chose the name because it had not broken resistance, and we just have a tightening weekly equilibrium. The monthly time frame here is very weak as well. And again, I just love the setup with every time frame going the same direction and just knowing any market weakness is only going to add to the weakness that this sector is already seeing. And again, the election approaching in 5 months and the poll results leading up to the election will have a fairly significant impact because this sector will be very clearly impacted significantly differently depending on who wins, more so than most sectors are. So that's where we stand overall. Again, lots of similarities between all these charts aside from the big bear day on private prisons today. Not nearly as big a bear day on the cruise liners and airliners, but again, they're not positioned well if XLF or SPY were to confirm a daily downtrend. We know the bulls and SPY have been very strong recently, so I'm not going to assume we're going to get a bear break. I just know that if we get a bear break, those sectors are going to be looking quickly back at their line in the sand lows, which were recently support levels that we bounced off of. So still plenty of trading volatility in this sector in both directions. I've been trading Jets, CCL, and GEO. Jets and CCL in both directions often in the last month, and just GEO bearish over the last couple weeks. But opportunity aplenty with this volatility. Just have to be cautious overnight because obviously these sectors are very susceptible to headlines. Hope you have a good day, and we'll see you soon.